Hey, this is John Casmon with Casmon Capital Group. And if you want to use your small axe to build a large empire, you should be checking out the Small Axe podcast with Nico.
Hey, Small Axe community, it's your boy Nico. This show is dedicated to helping you use your small axe to build a personal empire. So, on this show, I'm going to share some real, raw, behind the scenes info that's going to help you build your own multifamily portfolio. So, if you enjoy this show, I would love it if you can share it with somebody that you think could get value from it and write a review. It's the only way that we can grow this thing. Now, let's get to work. Let's jump into this episode and start sharpening those axes. All right, Small Axe community, it's me, Nico. Today, for the third time, I'm hanging out with my friend John Casmon. John, it's been a while, man. Welcome back.
Hey, Nico, thank you for having me back, man. It's good to see your face.
Likewise, man, I'm glad that we get to connect still. It is a relationship that I hope to maintain for a long time. My listeners may not know you, so if you could take a few minutes to go over your background and how you got to where you are today, that would be wonderful.
Yeah, absolutely. So listen, I'm a guy who was in corporate America. I feared losing my job, and I decided I needed to have another source of income. So I turned to real estate after reading Rich Dad Poor Dad, like a lot of other people. And through that, started investing. Thought I had a great strategy until the company I was working for went into bankruptcy. And I realized that the strategy I had wasn't working well enough. So I had to make a pivot and I made a decision. I met some folks, but I really was in this situation, which we could dig into more, but I was in a situation and while I was in that moment, I realized I just had to do something different. I learned about OPM, other people's money, raising capital, partnering with other people. And ultimately, I decided that I needed to go down that path. So that's what I did. We are investors in apartments. We do apartment syndication. And to date, we've invested over $140 million worth of apartments, working with other people, everyday professionals looking to invest in real estate, wanting to be real estate investors, but not necessarily wanting to be landlords. So that's what we do, helping other people invest, and happy to dig in and share more there.
Yeah, John, thanks so much for sharing. You took that leap, man. You did it. I want to be there. I am not there yet. And I don't know what's holding me back aside from the financial aspects, was I know that there are ways to supplement my income or my current W-2, but it's just maybe also fear and the security of having that W-2 in place. So maybe I'm a little slower than others in getting to where you are. But you mentioned there that you help people, and I know that you do because I have friends and family members that have invested with you or alongside you or know investments of that you've done and they're doing well. So can you talk about how you help people?
Yeah, we help people in two ways, right? So many of our partners, investors, whatever word you want to use, they're looking for the passive income. So they will invest alongside of us in our deals to do that. So typically our deals are going to generate anywhere between low end 12, 13%, higher end 18, 19% IRR. We do have some deals that have exceeded that, but we try to get people that range from like 15, 14, 15 is our target on the IRR side. And IRR, for anyone listening, is just internal rate of return, or it's like average annual return, just factors in time a little bit more. So people are looking for that. They will invest with us, but they don't have to do any work. We also have a lot of folks who say, "Hey, John, I want to be more active, right? I want to raise money. I have folks who I want to bring involved or work with on my deals. How do I do that?" So we do help those individuals as well. And we give them kind of a blueprint of how to raise money and how to invest in multifamily syndication. So that's something we've been doing for a few years now. We've helped a number of investors raise capital, build businesses, leave their W-2 jobs, and grow and scale. And as a matter of fact, I'm partnering with one of my clients on a deal now. So that's something that we've been really prideful of, being able to help other people grow and scale and expand their portfolio. And we do that through really a step-by-step system. And what's crazy is I talked about when I was in my situation, I'd heard of OPM and work with other people. I just didn't think it was for me. I really didn't. It seemed like something they do. Who they is, I don't know, but it wasn't me. So it seemed like it wasn't a fit because I just didn't know anybody who was doing that. I didn't have friends and family in real estate. I didn't know people who were raising money like that. I didn't have the network to go out there and be a syndicator. I didn't have a personality to just go out there and shake hands, kiss babies, and raise money. So I just didn't think it was for me. And it wasn't until I had a chance meeting with the guy who became my mentor, Joe Fairless. And through that meeting, he talked to me about what he was doing. I learned that he was coaching, and I realized that what I was doing really wasn't working. Even though I'd invested in a few properties, I had equity in these deals, but I didn't have cash flow. And when that job situation happened, the company I was working at went bankrupt really out of the blue. That's when it all hit me because I had just put down like $130,000 in my savings into
Wow.
another investment. So I'm sitting there like, man, if I'd known this was coming, I wouldn't have bought this property, right? I would have kept this money to have more flexibility. And that was the moment I realized I couldn't rely solely on what I had in my own bank account. So I ended up hiring Joe, worked with him, learned the game from him. He, of course, has gone on to build a $2.7 billion portfolio. But through that process, I realized that what we were doing was working. And it wasn't just luck, it wasn't just me. But if you follow a system, you can have success. That first deal I did was about a 3 unit, about a 2 unit, 3 unit, then an 8 unit, hired Joe. The next deal I did was 192 units.
Mm.
And that sounds incredible. But the truth is, I had relationships, I had partners that I made through these relationships. And from that, I was able to grow and scale. And that's really the key to this. It's relationships, is being able to scale, but you have to take action. For me, it was meeting the right people, intentionally connecting with the right people. But then once I did that, when I had the opportunities in front of me, I said yes and took action. And that led to some of the result today.
Yeah. You got to just take action. And sometimes it's scary, but if you're with the right crowd, with the right people, it can be a much more relieving or I guess alleviating situation. Like I don't do anything without certain partners and we do it together. And it just makes me feel a lot more comfortable working with other people. Today, are you still, do you have general partners that you work with exclusively? Do you work with multiple general partners? And what's your LP database like? Is it big? Like how many people do you talk to and et cetera?
We have a small group of partners that we work with. So I would say over the years, we have built some really great relationships. And that comes from it's a little system that we like to use. But one, how well do I know and trust you? I want to get to know my partners. I really want to know who they are as individuals, their character, their values. Yes, track record is important. We look at that too. But I think beyond track record, just who are they? And then also understanding that track record. How much of that is driven by just the market dynamics of the times when you made your investments versus the execution of your business plan. I think that's really key. And one way we look to gauge that is we want to see kind of the NOI growth you had in your projects. Were you actually able to drive the revenue growth you were looking for, right? So that's something we pay attention to when we're looking at potential partners, but also markets. It doesn't make sense for us to be in every city in the country. Like that doesn't allow us to be a better operator for our investors. So we focus on a small 2 hour radius of Cincinnati, Columbus, Indianapolis, Louisville. Those are our core areas along with Cincinnati itself. That's where I focus. We are starting to expand that slightly to other markets where we have strong knowledge like Cleveland, but that's where I'm focused. Outside of
Awesome.
that, we'll lean into our partnerships with people who are in markets like Atlanta,
Mm.
North Charlotte or North Carolina, Northern Florida. Like we have a lot of great relationships with people we've known for years. So when they have opportunities, if we've already gotten to know them, we know how they operate, we know their track record, at that point we may consider partnering with those individuals as well.
Yeah, it makes sense, John. Like you, so I might not come across a deal for a year or 2 years, and then I
Yeah.
might get two in 1 year or three in 1 year. So if you have investors that are sitting on the sideline waiting to invest, but you have an excellent partnership with people you've worked with before in a different market that have a deal ready, let's do it. Let's make a connection. I love it.
Yeah, and I think it comes back to one of the things that stops people from getting in this business or growing and scaling. Because the other fear that I had, I'm sure some of your listeners had, is when I was starting out, I didn't know if people would actually want to invest with me. And I didn't want to ask people, right? I didn't want to go around begging people to put their money with me, right? That's not something that's going to make you feel good inside. But
Mhm.
what happened is I realized there were people who were looking for the kind of opportunities I was coming across, right? It may not be everybody in your circle, but there's somebody in your network who is looking to invest passively in cash flowing assets that are going to appreciate in value over time and that are going to lower their tax liability, right? Those are three things most people are looking for. There's somebody in your network that you may not think of who is looking for those benefits. So when you can take yourself out of it and think about it from the audience you want to serve, the people you want to serve, now it becomes a bit more purposeful.
Hmm.
And that shift was huge for me because now I didn't feel like I was asking people to do me a favor. I was the one doing a favor, right? I was the one presenting opportunities to people who otherwise had no knowledge of real estate, or at least not within apartment syndications or having the ability to own a piece of commercial real estate. If they wanted to invest in real estate, they were probably thinking they had to buy a home, fix it up, and rent it out, or buy a home, fix it up, and flip it. Those are the two options most people know about when it comes to real estate investing. They're not really aware and savvy that they can invest passively in these large commercial real estate deals like you and I do. So that's really a great benefit because it really reduces the risk to those individuals. Being the conduit to that and being kind of the person who introduces them to these concepts, that could actually change someone's not just their own financial future, but their family's financial trajectory.
Yeah. It opens up a whole new world for people. And you just actually struck a chord with me. I got to share it with my own
Yeah.
personal limiting belief with thinking the way you just stated it of how we are serving people. We have people are looking for us for an investment, and they're looking to find some people like us who have what we can offer them because they need it. And I'm just always thinking the other way, where it's like, oh, who can I need to go find people that I can sell something to? And that's just really not the
Ooh.
way it is. And that I just found it and I felt it and I said, okay, that's something I can switch and change. And then also an example of a little bit of a flip of that. So somebody who that I know was actively investing for years, doing his own buying small condos and renovating them himself and renting them out and then eventually selling them, but not like a syndication, not like a 5 year thing, just selling them when he needed some cash or something. He got tired of it. And now in my last two deals, he is so happy to just passively invest. And he tells me all the time, this is just so much better. I'm getting returns from it. I'm hands off. I don't have to worry about it. You tell me what's going on. We have a quick conversation and that's it. Much better for him. So some people are really in need of it.
Nico, I want to just stick with that if you can for a second, because I think it's really important, right? So, for one, what you just said, that's the mindset that's so important, man. And I think that's why it's important to join communities, to be a part of like communities like you're building, because you really have to train yourself to understand the value that you're providing and believe it. And listen, I believe mindset is so critical, but I was not like one of those guys who just listen to gurus all day or motivational videos and all that kind of stuff. I actually thought it was hokey. But it's true. You've got to frame these things up in the right way, because when you feel like you got to go raise money, even the term raising money, I don't like it. I like attracting money.
Mm-hmm.
When you're out there raising money, you feel like you're calling people who really don't want to hear from you, and you're pitching them and you're trying to sell them, and you're trying to convince them. And those are all terrible things. Okay. They're terrible. What we really want is we want people coming to us to say, hey, I've got this problem. Hey, I heard you can help me with this. Hey, I heard you got some investment opportunities, right? And it's changing the flow of the conversation. It's changing the narrative and the dynamic of the conversation. And it's empowering you to be in a position to help other people. And if you feel like you're helping people, your approach is different. Your demeanor is different. The words you say is going to be different. Your confidence is different. And that is absolutely critical. So I tell people all the time, like, there are three C's that it takes to raise capital. And I may have mentioned this on your show before, but confidence is the first one. And it's confidence through and through. It's not this blind hubris. It's confidence in yourself. It's confidence in the platform, real estate investing. It's confidence in the deal. If you feel like you're pitching somebody or trying to sell somebody, that's not confident. And it's going to come across. It could come across as desperate, right? It could come across as, again, salesy. What we really want is for you to be in a situation where you believe in what you're offering and you're truly trying to help other people. Okay. That's the confidence. That second C is credibility. That's going to be the track record that you have. If you're newer, you don't have that track record, you got to lean on the team around you, right? Who else have you partnered with? If you don't have the right people, you got to go get them. Go get
Mm-hmm.
a mentor, go get a coach, go get a partner, go find these people who have the experience so that you can borrow their credibility, but not just for on paper purposes, truly to help you be more confident, to know that you've got everything you need to be successful. If you've got somebody who's not truly looking over your shoulder and helping you out and guiding you through that process, then you're not going to be confident. So get that, get the credibility you need so that you're comfortable, the people around you are comfortable, and you feel great moving forward. And then lastly is connections. You always have to be able to expand your network, right? You're doing that with your podcast, with your small acts communities. This is how you grow and scale. You don't just call your uncle and hope he invested the windfall he made with you, right? You got to expand your network to find the people who actually want what you have to offer. And that's going to set you up for success. So those three C's, again, are confidence, credibility, and connections. If you want to be successful raising capital, you have to follow those three C's.
It's great, John. Thank you so much for sharing. Oh, I love it. Now, you mentioned also that you invest typically in the Midwest, but
Mhm.
is it just multifamily or do you invest in other assets?
Primarily multifamily. We do have some investments in like some hotels and things like that, and I'm very interested in small hotels. But I've toyed around with some other asset classes myself, but multifamily is what I enjoy. It's tried and true. I don't want to say predictability, but I love the fact that the projections are there. I can forecast. I have a strong sense of where rents should be, where occupancy should be. So I like the fact that a lot of that data is readily available versus some asset classes, you have wilder swings as far as where demand is and occupancy. And if you're in an asset class where the trends are going in the wrong direction, that could be problematic. Multifamily is continuing to be in high demand. It's a simple enough asset class where most investors understand it. Even if you've never lived in an apartment building, you certainly know what an apartment building is and how the business operates, right? Somebody signs a release, they pay you rent, and you make money, right? So most people get that concept. When you go to different asset classes, you get into another level of complexity. And what I find is when the market softens, there's less demand for those asset classes.
Mhm.
So when the market's hot, everybody's chasing yield. So people who would otherwise be in multifamily start looking elsewhere. So they get into industrial or office or mobile home parks. But when it slows down, you really don't have people left who really do love those asset classes because if you can get yield in multifamily, most people just stick to multifamily. So I like the fact there's always demand in multifamily, both from the investor side of it, also from the resident side of it, versus some of these other asset classes. You don't see that consistency of demand or more ebbs and flows of it.
Yeah, perfect, John. Thank you. I agree with you, and I do love multifamily, but I do get that syndrome where I'm looking at other things occasionally. I just fall short because I don't have that experience, and I know how competitive the multifamily space is and all other spaces. So, for me to really become a deadly in another space, it's going to take too much time and effort at this point, and I really enjoy multifamily. So, back on that. I know my listeners, some of my listeners, you mentioned getting into partnerships, you mentioned getting a mentor, you mentioned jumping into a program, perhaps. My listeners might be fearful of today's environment. Yes, historically, multifamily has been good, right? But what today is there's some fear, right? There are less buyers out there. There's less competition. There's less sellers, and there might be some a recession, right? So how can people that are listening right now, sitting on the sidelines, right on the edge, but a little bit timid or shy, how can we get them to take that leap?
I think the biggest thing is just lean into your fear. And what I mean by that is whatever you're fearful of, go research that more. Go think about that more because you have to understand that there's that line that fear is just false evidence appearing real. So what happens is we make up these stories in our head. And too often, especially if you listen to the news or watch the news, you're hearing people talk about the economy and recessions and interest rates and all this other stuff. Listen, most of that is temporary, right? Those are temporary situations, and it doesn't change the long-term view from when it comes to investing. So I would say, what are you fearful of? Lean into that, understand it more at a granular level, and then how do you either mitigate that risk or remove it completely? So for a lot of people right now, interest rates, that's one thing that folks are concerned with. Real easy thing is just buy properties with a fixed rate in place. If you have a fixed rate, now you're not worried about interest rates fluctuating as much. Another concern people may have is where will the market be in 2 years, 3 years? Invest with a longer term view. So in our deals right now, I'm not looking at anything where we're going to try to sell it in 2 years. If we're buying it, we're expecting to hold it longer term. Doesn't mean I'm not going to be flexible and sell if I get a great offer in 2 or 3 years, but I'm not going into it with that business plan. I'm going into it with the assumption that, hey, we're going to hold into this longer. We're going to sell when it makes sense to sell, but I want control. I want flexibility. I'll give you a great example. The deal we have in Louisville, I know we talked about that before. We bought that deal. We assumed a 12-year loan on it. So we had a 12-year loan, fixed interest rate. And on that project, I don't have to sell for another 9 years. I don't have to do anything for 9+ years, right? So I've got a lot of power and control. I get an email or phone call about that property probably every other month
Mm,
from a broker or somebody who's interested in buying it from me, either even other investors that we know. So that's a great position to be in, right? Because I've got all the power. Where you don't want to be is in a deal where your loans come in due in 6 months
mm,
and you haven't created enough equity in that project. So I say lean into the fear to understand it more so you can solve for that specific fear. It's not investing. Investing is not the problem. Apartments are not the problem. It might be that specific strategy. I'll go back in my story too. When I was starting out, I was doing some flip projects and they actually went terribly wrong. And I had to step back and say, what the heck happened here? Think about it. On a flip, first of all, I had a day job. So I had two small children. I'm running over this property to oversee it. I wasn't even supposed to be in that role. I had a partner. That was his job. He ended up having some life issues kick in and just disappeared. So I had to take over, right? So I'm in a position where I have zero experience. I've never done it before. I'm leading this. I'm trying to lead a crew and they don't work the way I work. I'm used to being in a meeting and we agree to something, everybody walks away and they do what they said they were going to do. Guess what? When you're dealing with contractors and plumbers, and the plumbers are actually pretty good, but the painters and everyone else, listen, if you're not there to hold their hand and hold them accountable, they'll show up when they feel like showing up, right? That was hard for me to learn how to manage that up front. But the biggest issue is there was zero money coming in,
mm,
right? I had no money coming in, all the money going out. And I had expected to sell this home in about a 5 month window, 5 to 6 month window from close to close. It took me a year and a half
mm.
to get that thing done and sold. Guess what? We lost money, right? Because I had no money coming in. We missed our time frame, and I had zero experience in that space. So those are the three lessons I learned. I want to invest in properties where there's money coming in day one. There's enough money coming in to pay all the bills day one, right? I have a clear plan to create value. I've got experienced partners, especially starting out. I've got experienced partners that I'm working with, right? And then I'm going to sell when it makes sense for me to sell. So that control is something I learned from those failures. And I think that's key here for any investor. Invest in deals where you can mitigate those risks. You can understand how much leverage or influence they have over being able to navigate changes in the marketplace and partner with individuals that have that skill set. I would do that because the best opportunities for investing are going to happen now. They're going to happen where there's a little bit of conflict, there's a little bit of friction that creates opportunity and value for investors. So lean into those fears, understand them at a deeper level so you can address them properly, but you still have to take action. I'll give you one last thing. Ask yourself, if you stayed exactly where you're at today and you didn't make any progress over the next 3 to 5 years, would you be happy with that? If you're completely satisfied with your life, by all means, do nothing. However, if you want to change, if you want to improve your life, you're going to have to take action. There has to be something going on in your life that you want. And if you can't identify what that is, you're never going to have the motivation to take action and move forward. For me, I will tell you, those flip projects, as bad as they were, they motivated the hell out of me because
Mm.
I had lost this money. I had these two small children. I had a job that was in flux, and I had to figure out a better pathway forward to take care of my family, and I need to really learn how to be a much better real estate investor. And all of that kicked me in the butt to take more action. And ultimately, that's how you find success. So maybe you just need to get punched in the teeth a little bit more. I don't know. But you got to take action. It's something's got to motivate you to take action, not just sit on the sidelines and wait and watch.
Yeah, John, so cool, man. It's true. We all have to take action if we want to progress in life, and we're all going to face challenges. to mitigate if we are afraid of the challenges that we're going to face or the errors that we're going to make some regardless, but we can mitigate some of those through a mentorship or coaching program. Perhaps you can talk a little bit about yours and what you do.
Yeah, so listen, we help a select number of folks, right, through our platform. The biggest thing for us is we do one-on-one coaching. I think it's the best way to learn. So one-on-one coaching, we do a blueprint on how to invest, everything from selecting markets to raising capital to analyzing deals, due diligence, all that stuff. Where we really stand out is really creating some of the systems and automations to help you with your marketing. My background's in marketing. I did that for 15 years. And just like any other business, real estate investing, particularly syndications, it's a marketing business. So you have to understand some of these things. I talked about not doing these cold calls to family and friends and begging for money. One of the ways you get around that is you learn how to attract the people who are looking for what you have. So we give you some tools, some templates, some resources, and some coaching to help you do just that. So we help people raise money for those deals, make those connections, expand their database. And that's really what I think is important if you want to scale. Now, on top of that, you do get direct access to me. And that's really key because you need somebody you can call. Listen, with any course, and Nico, I know you've done some coaching as well, right? And I've done coaching too. Um, it's great to have the material, the education, right? But where the rubber really meets the road is your unique situation. And it's interesting. I had a guy on my show, Rod Santomoso, and he said something to me a long time ago, and it was just so brilliant. But he said there's a difference between coaches and mentors, right? Coaches, mentors, and consultants. A lot of people use these words as interchangeable language, but they're really different. Okay. What a mentor does is a mentor shows you how to do what they've done. Here's what I did, do what I did, right? Get the same result or get similar result. That's what a mentor does. A consultant just tells you what you should do. They'll look at your situation, tell you what to do, and then leave it at that. But a coach looks at you for who you are, your skill set, your situation, and they try to extract the most value out of you by catering things to who you are. That's why you can think about professional athletes and someone like Phil Jackson can coach a Shaquille O'Neal, a Kobe Bryant, and Michael Jordan, but he coaches them all differently to get the most value out of them instead of just telling them, hey, do what I did, right? Michael Jordan failed as a coach because he would tell the players, hey, just go to the gym, shoot 500 shots or whatever it is, and you'll be great. He's just telling them to do what he did. They don't have the same makeup. So that's really that nuance difference. So I say that to say it's really important to have someone who is a coach who can look at you, your skill set, your advantages, your disadvantages, and help you get the most out of your situation. A lot of times people don't have that nuance or they're just not willing to do it. And that's something we pride ourselves on. So again, folks want to learn more about that. They can just go to our website and go to casmoncapital.com. There's a button on there for coaching so you can learn more about that and apply.
You're the man, John. You just enlightened me. I'd never separated those three, and your definitions once again have just nailed something into my brain that's going to change the course of my vision and how I interact with people and how I act. So mentorships, consultants, and coaches, very different roles in life and different perspectives. That's so cool, man. Thank you, John.
Yeah, absolutely. Listen, give credit to Rod. He said it to me, so I'm just sharing it here on your
Okay,
platform.
you
But
did. Yeah, you did
yeah,
give him
man. But
credit.
yeah, it hit me the same way because it really does. And I think it's important too. And the reason I brought up here is, I think a lot of us are looking for education and support and to grow and to scale. And maybe you're skeptical. And the last thing anybody wants to do is spend a whole bunch of money on a program that doesn't help them get to where they want to be, right?
Mhm.
So I think part of what you've got to ask yourself is, what are you actually getting? Are you getting the textbook education of here's how to do this, right? Are you getting somebody who's just going to tell you what to do, or are you going to get help, direct help from that person, not the figureheads, not the person who, but you're actually going to talk to somebody else? Are you talking to the person that you connected with, that you heard, that you saw? Is that the individual, or is it somebody else on their team? Because I don't know about you, but if I like you, I want to hire you. I don't want to hire you thinking I'm getting you, but then really I'm spending all my time talking to somebody else who doesn't have as much experience or knowledge or expertise, right? So that's something that I think people need to think about as well when they're looking to make that investment, is just understanding who you're going to work with and how much access do you get to that person.
Awesome, John. You're the man. So I know you gave the website already where people can find you, but I'm gonna ask my final question now, and then we're
Yep,
gonna just give them that information one more time, just so it's at the
sure.
end, and they can get their pencils ready now. If that's what they use anymore, man. Maybe they just go right to the website after
I just go
listening.
to the notes section if I'm listening on my phone. So
There you go. There you go. All right. Oh, you've answered this. This is going to be the third answer. I don't even remember your answers, but I'm sure it's going to be cool. So let's imagine it was 100 years from now. You now have great grandchildren and they
ooh,
wanted to write a book about you. John, what would you want them to title this book?
wow, what an incredible question. Jeez, that's a great question. What would I want them to title the book? So I would want the book to be about perseverance. I don't know the exact title, but it would need to be about perseverance. Then that would be the angle I would want them to come from. I think it's very important to recognize that things come easy to some people. They do not come easy to me. Some things do, but most things for me, I had to really process. So even real estate investing, it took me maybe 2 years of just studying and education before I made my first investment. I just needed to really understand it. Syndication, I had to really understand the things I knew and didn't know before I was comfortable hiring a coach. Even after I hired a coach, it was another maybe 12 to 18 months before I did my first deal. And a lot of it is because I can be very literal with things. So I take it all in. If you tell me to do something this way, I'm going to try to do it that way. Go back to our whole coaching conversation. But if I'm not getting results and you tell me to do it that way, I'll keep trying to do it that way before I realize that it's easier for me to do it this way. And then I'll do it that way and get my results. So I think the key for me is just being able to come through and preserve and just keep fighting no matter what. If you can see that example of success, the proof is out there. You just have to figure out what works for you. And that's what I've been able to do throughout my career. And I hope my children and grandchildren take that to heart. And that is probably the biggest thing that they learn is perseverance. And then I would say a small side note to that would be understanding that on this planet, you want to impact three circles of your influence. The first is going to be your family. Okay. The second C is going to be, or the second circle is going to be your community. And then that third impact is the causes, right? So your circle, this is your inner circle. The next circle is going to be your community. Third is your causes. We try to make sure we spend a lot of time coaching the boys in their sports and being involved in the community, volunteering for organizations, sitting on different boards, but just trying to make an impact where you can. So hopefully it's about perseverance and impact.
Oh, that's great, John. Thank you so much, man. All right, let's wrap it up, dude. It's always so nice talking to you. I learned so much. I get so much value from our conversations. I know our listeners will too. So let's get them that website so they can check out your coaching program if they want one more time. And then we're out. We're done.
Yeah, listen, and not just coaching programs. If you just want to check out our podcast or anything about our investments, passive investment opportunities, or anything like that, we got some free resources as well, including 7 questions to ask before investing in a deal. So check out all this cool stuff we got on our website. It's casmoncapital.com.
Oh, John, you're the man. Thank you so much. Again, I truly appreciate our conversations and I appreciate you coming on today, despite everything that's going on in your world. And have a wonderful day, my friend.
Absolutely. Thank you, Nico.
All right, and that's a wrap, Small Axe community. So I wanted to take a minute to say thank you so much for listening to the show. And if you liked it or got any value from it, it would really mean the world to me if you would share it with someone else and write a review. Remember, guys, keep sharpening those axes. Let's get out there. Let's crush it. Love you guys.